please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Good morning, welcome, and all of you a very happy Christmas from all of us here in the CNBC studio. It was an enjoyable weekend, wasn't it?
Yes.
We didn't have any Infosys suddenly telling you that they have a board meeting. We didn't have the government telling you that they are trying to announce some extraordinary scheme. Remember, 1 December ago, the last week of December was, extremely hectic with each day, all of us collecting data and speaking about demonetization. The affordable housing scheme got announced. This was a really restful weekend.
Yeah,
It
was, and 3-day clean weekend.
Yeah, 3-day clean weekend, and for me, I mean, you realize the value of festivals after you become a parent, because when you have a small baby and you have to show them Santa Claus and Christmas tree, then it becomes a far more special. But it's been special this year, right, Anuj? I mean, it's the last trading week of the year, and if you look back, it's been a great one for traders and investors.
Oh yes, and it was your first Christmas as a mother, Sonia, so obviously I can see the excitement. I have had 4 years as a parent, so this was my 4th, of course.
No, I'm not, and I'm not going to tell you how many I have had.
Of course, Siddharth, Latha's son,
is
and
24.
my daughter, they share
Same
birthdays.
They're both Christmas Eve babies.
Of course, both. So, but anyway, I think you hit the nail on the head. It's been a great year, I think, and the market is ending the year with the template intact. The best part about this year has been that at any point you could have bought and today you were sitting on money, because that's the magic of a market at all-time highs. But of course, if you bought on declines and dips, all 300, 400 points at best, then you're making a lot of money. And mid-caps have outperformed this year. In fact, even this month up 2%, outperformance of 2 months. Index is up 4.5%. And 17% this year for the mid-cap index. And expiry week is normally about momentum, so that may continue with individual stocks. And just a point on index, I think 10,500 calls saw some short covering. The SGX Nifty is indicating will start maybe with minor tick of green. I'm more interested in the level, not in the points up or down. That happens after a 3-day weekend. So 10,500 still has some open interest. Let's see if that gets covered. But the good point about this year has been, I don't remember when was the last year that retail investors made so much money in the market. They have made a lot of money this year because it's been driven purely by...
No, I take your point on that, Anuj, but, if you looked at the day we hit 10,000, that was July 26th. So from that day to now, we've made 5%. So more, it's also being in the right stocks. If you were in mid caps, I guess the number would be higher. I haven't checked that. But, there has been a lot of volatility in the last 3 or 4 months. But the point is, people are still in the money. You forget, ultimately, you're not always entering at 10,000 or at 10,200. People have been able to inculcate the SIP culture. So, almost everybody is in the money. That point is broadly taken. And, a little later, we'll play to you the chat we had with 4 of the leading fund managers in the country. And one of their biggest worries is that will domestic investors be able to take a down year? Okay. Because they have had it so good, exactly what Anuj said. It's been so good, will they be able to, accept? And they were all extremely wary about valuations at all-time highs. Their wariness made me very happy. I mean, if you're so skeptical about the market, then chances are it's not going to look so bad. But just to end up where we began, today itself, I guess the risk on is there in the global markets, especially if you look at the way Hang Seng is moving up. I think we will move with a bit of a cheer. Also because what Manisha is telling us, steel prices in China at 2-year highs. So all told, it looks like, we are not going to swerve much from that 10,490 or 10,500 mark that we have been targeting.
Crude could be a dampener though, right? I mean, $65 a barrel. So
no,
would that
all these days it has not been.
Okay.
It's been around 64.80 for a better part of this month. But yes, we have to be wary of 65.30 today.
Yeah.
So you'll have to be a little wary about that.
Okay. In fact, I was reading an article about this investor who wrote that, forget about Bitcoins, the kind of money that I've made in the mid-caps this year have far beaten the gains that one made in Bitcoin. So it's been a great year for investors, no two ways about that. But let's kickstart the show on that note and take a look at what Chris Wood of CLSA has to say as we head into trade this morning. Chris says that greed and fear's base case on the US dollar for 2018 is that sooner rather than later, dollar weakness will resume, creating the potential for a break below the key 91-92 level on the US dollar index. Such a development would, in his view, trigger more fund flows into Asia and emerging markets.
Okay, for some money market views from Bhaskar Panda of HDFC Bank. First on the rupee, Bhaskar says the Catalan vote roiled global markets before Christmas. However, cheer in Indian markets seem to be continuing. Hence, I expect the INR appreciation trend to continue. Range for the day seen between 63.90 and 64.10 versus the dollar, that is.
Okay, and on the bonds, he adds that the Indian 10-year benchmark yield has been continuously moving higher. It may continue to consolidate with a range of 7.25 to 7.30% for today.
Okay, if it goes to 7.30, then there is a bit of a scare, you will have to say, for the NBFC companies. But they have weathered it very well all these days. Okay, Anuj, I just wanted to chat with you. On Friday, we missed Sonia at that chat we had with the 4 fund managers. For me, as I said, the key takeaway was that all of them were so wary about valuations next year. When you see 4 top fund managers wary of markets, then I'm quite sure that the markets will continue to climb a wall of worry. What did you make of it?
It will, and you know, for me, the other key takeaway was that for all 4 of them, when we asked them what's your biggest sectoral bet for next year, answers were completely different. You know, there was no consensus. And I think that for me is another indication that this bottom-up stock picking is going to make you a lot of money in 2018 as well.
Okay, so let's in fact hear out a few snippets of that conversation that Anuj and Latha had with the top brass of the mutual fund circuit. Listen in.
Certainly, I think the trend, if you notice, from October has changed. And if you see the rally in some of the construction stocks and some of the rural-oriented stocks, they've been phenomenal actually. So I think the trend is certainly changing. In any case, you had a long boom of quality. So clearly the trend change is noticed, and I think it will last for some period of time. That's how we look at it at this point of time.
Okay, Nilesh, same question to you. We've seen the last bit of rally being driven by names like Larsen. Also, you know, a lot of mid-caps like NCC, HCC, they have started to do well. Is the market now betting on balance sheet repairing as well, and some of these companies getting large orders and executing them well? Do you think that could be the theme to work on?
So as Naren mentioned, typically ahead of election, government will focus on inflating economy. They will work on infrastructure projects to inflate economy. And my guess is that this time there will be focus on rural economy as well. So combination of infrastructure and rural and agriculture related theme can be played out for election. But within that, one caveat is that today many a times when a sector runs, the leader and the laggards both gets run up, especially in a momentum market. So please put money with quality, with leaders rather than laggards. There are many, you know, stocks where equity value is returned on by virtue of debt burden, yet the stock market is giving them higher valuation. They'll probably get surprised by the equity write-downs.
Navneet, related question would be the way in which commodity stocks have done, metals in particular. Will 2018 be the peak off year, or do, as all cycles, the metal cycle also likely to overshoot, and therefore 2018 good for metals?
So two views. I think that the world is in a synchronized growth momentum. I also think that the Trump, people were worried about the trade war and currency war, but he has actually started a tax rate war. So 35 to 20% may have to be followed in some or the other form by most of the other countries. The protectionism will lead to globalization of what I call localization. So investment cycle globally from a capex perspective is likely to revive, which will also benefit India. I also think that globally defense spending is likely to go up because of the rising geopolitical risk, so that will benefit. So I think some of those sectors from the Indian perspective also can benefit. So whether it's the construction, capital goods, engineering, all of them are going to be a beneficiary of that. From the metals perspective, whether this will also drive the metal prices the way they did in last cycle, I think we may not see the similar kind of momentum in the metal prices. I think that China's growth, because China was the main commodity guzzler and which drove the, whether it's aluminium or copper or zinc, this time the growth of China is going to be led by a lot more in the consumption side than the infrastructure side. So we may not see the same kind of metal rally as we saw in the last cycle.
Okay, well, of course, today is Boxing Day, so a couple of markets are shut. Australia and New Zealand for sure, it's a big day for them, and I think even Hang Seng. But Nigel, here's Worldview with Nigel, and of course, Nigel, happy Christmas break for you, and welcome back.
Well, thanks so much for that, Anuj. Boxing Day, and I'm in the office post-Christmas. But the markets, as you said, they have been doing well. Well, in Friday's trading session, if you took a look at it, the US markets, they ended in the red, but they have been on a 5-week winning streak. So that's something that you should note. Well, Trump signed the bill that was long awaited. And the reason that the Dow ended in the red was because Nike, that in fact was down in trade. It came out with its set of numbers. There was some compression on gross margins, and that explains why there was selling pressure. Well, there are various analysts on the street that expect that the earnings estimates could go up by nearly around 5% owing to this tax cut. So that would be a positive in the time to come. In terms of economic data, the personal income grew by close to around 0.3%. That was a tad bit lower than what the street was working with. Even durable good orders, that in fact rose by around 1.3%. That as well was a bit of a disappointment in comparison to what the street was working with. What was good though was the new home sales. That rose to 10-year highs, so that was a bit of a positive. European markets, well, there was more red than green that we saw on the screen. The FTSE, in fact, did end with some red in Friday's trading session. But the Spanish index in particular, that was down and out. Remember, midway through the trading session, banking stocks, they did take a bit of a hit. That's on the back of the Catalan separatists. They won a vote that calls for independence. That's post the local elections that took place. Well, this morning, in fact, the Asian markets, the Japanese market has come off a near 25-year high. So keep an eye out on that one. In fact, I think it's moved, it's almost in the red now. A couple of markets that are open, well, more or less flattish, but with the positive territory. And as Anuj said, yes, the Hong Kong is closed, New Zealand as well as Australian markets, all of them closed. Back to you.
All right, Nigel, thanks a lot for that. Well, moving away from global markets for a bit, there are some important takeaways coming in from the US FDA chief, Scott Gottlieb. In his latest tweet, he says that this year the FDA approved a record number of generic drugs. For the 11 months from January to November, the FDA gave 771 full and 168 tentative generic approvals, plus the December total is still to come. That compares to the second highest record in 2016 with a 12-month total of 630 full approvals. So hard at work there.
Absolutely. And in a reply to an article indicating cancer prices have risen, cancer drug prices have risen 1,400% with no challengers, Gottlieb tweets that FDA is taking new steps to stem pricing abuses. Branded companies can help too by contracting carefully when they choose to out-license old generic drugs, building into these contracts provisions that would help prevent abusive drug pricing by the acquirers. So, well, that's actually music to the ears of, I guess, Indian generic makers.
Yes, it's the last trading week of the year. And although most of the global markets are in holiday mode, we are not. We're still working, and our entire research
and making news. And how?
Yes.
I think we have a top 30 lined up.
And telling you how you can make a lot of money as well. The SGX Nifty, by the way, is flat with a bit of a negative bias. So let's see what stocks to keep on your radar today. Our team is here to give us that very list. Anuj, what are you looking at?
So first is EIL, a strong delivery buying on stock at 52-week high. It's a stock which has done remarkably well, of course, in the PSU space and a proxy to oil and gas. So that space has done well, up 6.5%. Christmas has ended, and now I think a lot of people will look at fitness once the new year is over. So Talwalkar, what a stunning rally for last 1 month actually in this one, and backed by delivery, up 23% this one.
But fitness is after Jan 1st.
Exactly. So market preempts, right?
Will there no brewery stocks?
Well, let's see.
Let's see. Today, maybe this week, it would be brewery stocks. Yeah. Let's wait and see. For the moment, we are going to going into something green for the end of the year. Fertilizer stocks, Naveen, Coromandel and EID Parry are in the news.
So both, Latha, I expect to be in green, but more important will be for Coromandel International. What they've done is, it's an intergroup transfer per se, but they've bought the pesticides as well as micronutrient business from EID Parry. Remember, this business, they did a revenue of close to 130 crore, which is close to 10% of the total crop protection business of Coromandel. Why is this important? Remember, it's more of a strategic fit for Coromandel, given the company is more pushed towards the bionutrient segment as well as micronutrient segment. These are the two key segments that the company will be focusing on going ahead. That is one key point. The other one being the margins. Remember, the Coromandel's crop protection business currently does a margin close to 20%. This business also gives that 20% margin. So overall, strategic fit, I expect both the stocks to be in green in today's trade. Back to you.
Okay, thanks a lot for that. Well, it may be a Merry Christmas for a lot of people, but definitely not for a lot of the IT companies and the employees. The H-1B visa regime is likely to get tougher, we understand. Anisha joins in to tell us what the reports are suggesting. Anisha?
Well, yes, definitely a bit of dampener coming in for the IT companies and the employees, given the fact that the Trump administration is looking for stricter norm when it comes to the H-1B visa. Now, this is something the IT companies have been grappling for a year and a half. And now we understand that the Department of Homeland Security might look at reworking a proposal of 2011 that suggested that the petitioners will have to pre-register for the H-1B cap lottery, and also that companies will have to first get the cap numbers and then only they can petition for the cap limits. Hence, telling you that just the norms are going to get stricter in terms of the employees. They're going to give priority to the employees that are highly paid and highly skilled. Telling you that the margins for the IT companies may skim down further. There's also one report that suggests that they might consider changing the H-1B visas yet again. Sorry, the wages yet again. That means again there might be more pressure on the companies' profit and loss, given that this is something that has been leading to a bit of dilution of the IT company margins. Back to you.
Okay, Anisha, thanks a lot for that. Well, last week, of course, a couple of experts told us that some of the cement assets may fetch, a lot of price, may in fact more than the debt, and now we believe that Binani Cement could be one such case. Nigel?
Well, Anuj, Binani Industries could be the stock that you could be looking at if in case this does happen. First, I'll run you through the news. Well, as you indicated, reports indicate that Aditya Birla and Piramal and Bain, as well as Shree, they made aggressive bids for Binani Cement. The bid price could be higher than what debt they have in their books, so that could give some value to shareholders as well. Remember, the company's debt is nearly around 3,600 crores. I've reached out to a lot of these cement companies, and what I'm told is maybe there could be some kind of competition that could come up as well. So maybe some of these cement companies may not be able to bid. So you'll be looking at some of these PE-backed companies. We here at CNBC TV18 have not independently verified these reports. But remember, Binani Industries, that stock was up 20% on Friday, and in the last 1 year, it's close to have doubled.
Okay. Thank you very much for that, Nigel. This is what I picked up from bankers as well, that there is a lot of interest for cement companies as well as there has been for steel companies. Anisha, Cummins again in the news.
Oh, well, yes, this is what we are picking up from reports, and something that we have not individually verified, but reports suggest that Cummins might be looking to acquire the majority stake in the Kirloskar Oil Engines company, and the deal might be valued at around $500 million. Now, remember, this is not the first time that these companies are coming together, because back in 2013, Kirloskar Engines had sold off the entire stake to Cummins in one of the JV that they had formed. This will be a natural fit for Cummins, so it should be good news for the investors there as well. Even for Kirloskar Oil Engines, it should be a good news because they have a wide group, and the demonetization or the liquidation of this particular asset will come as a positive. In terms of valuation, if you look at the market cap, it's around 5,500 odd crores for Kirloskar. At a 60% stake for the promoters, it works out around 3,200 odd crores. So that is what the news report suggests, but we need to keep an eye out on the valuations to see how this deal fructifies. Back to you.
Okay, thanks a lot for that, Anisha. Nigel, why are you watching out for SAIL?
Well, Latha was talking about this news as well earlier this morning to me. Well, the PMO has asked departments to use Indian products. This is with regard to the dispute whether or not the Indian railways should be using the steel that's provided by domestic steel makers, or in fact import steel. So that was the tussle that was going between the steel as well as the railway ministry. Now, in fact, the PMO has asked these departments to go ahead and go with the Make in India campaign and in fact use India products. That's why in fact SAIL could be a potential beneficiary. Remember, the first order was likely to be close to around 500,000 tons. It could go up to around 1 million tons. So in that case, we could see SAIL opening up in the green.
Yes, Nigel, actually this was a story we broke on Friday, that Steel Secretary Aruna Sharma has written to the railways because the railways floated a global tender asking for rails. Yeah. Sharma's point was that when SAIL is available, you cannot float a global tender. And now Financial Express has reported, and that's what Nigel is quoting, that the PMO has wrapped the railways on the knuckles and said you should be buying indigenously. So, well, if H-1B visa hurts us the other way around, here we are hurting global steel companies. But I think an incidental beneficiary may also be JSPL if SAIL is unable to fulfill the contract.
Yeah, I guess if the theme of the Prime Minister is Make in India, then you might as well use what's made in India, right? But let's move on, because a lot of these companies the oil marketing companies may be in focus. There are talks that IOC and BPCL is together keen to acquire GAIL. But these are just reports. Naveen joins in to give us more. Naveen?
So, Sonia, as you pointed out, yeah, IOC and BPCL are keen to acquire GAIL. That is what reports have been suggesting. But I'll put it as two headlines. One is this, because both these OMCs, they believe that going ahead, this will help them become more of an integrated service provider. That is what they have proposed to the ministry. The second headline being that GAIL is keen to get merged with ONGC. What GAIL, the proposal that GAIL has given is they believe that this will help the gas producer as well as the gas transporter to integrate themselves, which will bode well for both these companies. Also, the reports have been giving us suggesting that this will happen, this merger will happen only post the HPCL as well as the ONGC merger. As you pointed out, these are reports and CNBC TV18 hasn't verified them. Back to you.
Okay, thank you very much for that. And now we have a bunch of other stocks that Sonal has on her radar. Fire away, Sonal.
Well, a couple of stocks on my radar today. I'll start with NBCC, which I expect to be in the red today. Well, why red? Because CBI has filed a corruption case against the NBCC chief in relation to the 2,000 crore Pragati Maidan revamp project. However, NBCC says that tenders are called in a competitive manner and they have no relation whatsoever with the award of subcontract order. The other stocks to watch will be BHEL, which has bagged an order worth 672 crore rupees, and this is in relation to the mainline EMU trains. The other stock to watch will be PowerMech, which I also expect to be in green because it's incorporating 50% joint venture with Skipper TND in Dubai Multi-Commodity Center. Another stock that I expect to be in green is Prakash Industries because SEBI has revoked the shell company status that it had given to the company back in August. Back to you.
Okay, thanks a lot. That's a quick snapshot of all the stocks that you need to keep looking out
Just
for
to add, Prakash Industries, the market always believed was not a shell company. So it already got the leg up. Maybe today a little more, but clearly SEBI is behind the curve in this one.
Okay, so here's a quick recap then of our top 10 stocks that we're looking at. Expected to gain today are names like EIL, Talwalkar, GAIL, ONGC, IOC, BPCL, SAIL, Binani Industries, Kirloskar Oil, Cummins, Tata Steel, JSW Steel, BHEL, PowerMech and Prakash Industries. While stocks expected to be under pressure today, some of these crude-oriented plays because of how crude is surging, Asian Paints, Shalimar, Kansai, Nerolac, etc. IT companies, TCS, Infosys, Wipro, Coromandel International, EID Parry and NBCC.